Hello everyone. It's Khaled. This is the Daily Pitch International Breaking News section, and today we will be discussing the PPI and retail sales for the US. If you haven't liked and subscribed to our channel, let's do so and move directly to the economic calendar. So January 14, we have a very important economic data, which is the PPI, the inflation from the producer side, and the retail sales for the US. We will be analyzing this data and see what is the effect on the dollar index. Usually I would like to analyze the dollar index because it will be affecting several currency pairs and commodities as well. So let's begin. Looking at the forecasted number, we can see that the core PPI month over month is expected to be at 0.2% and the PPI month over month as well at 0.2%. As for the retail sales, the monthly retail sales at 0.5%, increasing from 0 the previous, and the core retail sales, which is excluding food and energy, is expected to be at 0.4%. The first scenario, let's say these numbers are better than expected. If the core PPI is higher than expected and the retail sales is higher than expected as well, this will give a signal that the Fed should keep interest rates higher for longer, because the inflation is still higher and at the same time the retail sales is still doing well. Keeping interest rates higher for longer, this could be a signal that that dollar index could be breaking. The first area of interest I will be looking for is breaking above the 99.2, and most importantly to break above here. Moving up, I will be looking at the 99.5 price level. Keeping in mind that yesterday we had some economic data, it was the CPI. The CPI year over year came in similar to forecast at 2.7%. It's very important to keep this note in mind. So this is the first scenario we will be looking for. In case the numbers are better than expected, this will signal that the Feds could keep interest rates higher for longer. While let's go to the next scenario. What if the numbers are lower than expected? If the PPI inflation is lower than the forecasted, lower than the 0.2, and as well the retail sales is lower than forecast, this means that inflation is dropping and as well the retail sale activity is dropping. This could be a signal that the Fed should start lowering interest rates faster than possible. If we look at the general market sentiment, the CME Fed Watch, the market is pricing 2 rate cuts during this year, while the dot plot that we had in December was pricing in 1 rate cut. So these two numbers lower than expected could be a signal that the Feds could start lowering interest rates faster than the market is signaling, and the effect on the dollar index will be negatively moving it down. So I will be looking, the first area is the 98.5, and even breaking lower, I will be looking for the 98 approximately, these candle lows. In case we have additional volume and volatility, let's put this with red. In case we have additional sellers momentum on the dollar index, I believe we could be moving lower, and this will be my next target I will be focusing on, which is these candle lows at the 97.5. This is the second scenario, of course, if the numbers are lower than expected. And the last and least favorable scenario, what if the numbers are mixed or they are neutral, similar to forecast? In this case, usually you will not see a direct, a one-sided move. That's why we will be looking at the following price action, just a price action doing something like this, waiting for the next fundamental catalyst to give us a more clear direction or a forward guidance, if you want to say, of what the next step will the Feds take. So guys, these are the three scenarios where we will be looking for. Keep in mind that we could see some volume and volatility during the news release. Watch out for your trading entries. Watch out for the volatility, spread and spikes. And hopefully you enjoyed this video, and we will see you soon. Thank you so much for joining.